Hello, this is Rick Cortez. I am CEO of Broadmark Asset Management, and this is the July 2024 update on the Westwood Broadmark Tactical Growth Strategy. And momentum has been very powerful this year. The rise in the S&P 500 during the first half of the year is the second largest in an election year since World War II. But I'd like to point out a couple divergences that we're seeing in momentum. The first divergence is a breadth divergence. On your screen, you can see the S&P 500 in the top panel and our breadth model in the bottom panel. And the breadth model encompasses all of the industry groups in the S&P 500. As you can see, this model peaked late last year and again early this year, and since then, it's made a series of lower lows when the stock market has made higher highs. The second divergence is a volume divergence. On your screen, you can see again the S&P 500 in the top panel. In the middle panel is up volume and down volume. And the bottom panel is the spread between up volume and down volume. And as you can see, the spread is still positive, but it has not made a new high since the beginning of the year, along with the stock market going to new highs. So this is a volume divergence. Now, let me say that momentum is still positive. We still have a long position in the market. Divergences are conditions. They're not triggers. And many divergences are resolved to the upside. However, negative divergences can be a kind of canary in the coal mine, especially when we haven't seen a correction in quite a while, or a meaningful correction in quite a while, as is the case now. Now, that said, we currently have a 60% exposure to the market. In recent months, we've diversified into more defensive areas, such as utilities, healthcare, and more recently, communications. We also have positions in the equal-weighted S&P 500 as well as the cap-weighted S&P 500. Stock market history tells us when there's been a very strong first half of the year in an election year, that usually spills over into the second half of the year. However, the period from July to November in election years, no surprise here, is often very, very volatile. So let me take this opportunity to remind you that our tactical growth strategy has low correlation, low volatility, and can act as a shock absorber during difficult markets. So this is Rick Cortez. Thanks so much for joining me. Please join me next month for the August update. Thank you.